big question, is volatility back? We'll be looking at the S&P 500 and the VIX to get the answers today. So why are we asking if volatility is back? Well, it is October, and we haven't even entered earnings season. We know there's a number of economic reports due out before the next Fed meeting in the first week of November, and of course, there's the election. So while we wait for all of those things to occur, there is one thing that just happened that we have to take a closer look at. That is a long streak had just been snapped. The S&P 500 just endured its first 1% decline in the last 20 trading days. As we can see from this chart, that's a pretty long time span. In fact, if you go all the way back to the beginning of the rally in October 2023, it's the second longest streak without a 1% decline, behind the 52 trading days here from early May to mid-July. And not surprisingly, during that period, the S&P enjoyed one of its most consistent rallies of the entire time. If you go all the way back to the very beginning stages from, again, late October to mid-December to find one similar to what we just had. And so if we look closer into this, we can see from that point, the last time we had that 1% decline was on September 6th. We can tell that the declines that we have had have been extremely shallow, right? Other than the 90 basis point decline that we had on the first day of October just last week, there had not been a decline greater than 30 basis points the entire time. We haven't had a 1% gain either, going all the way back to the middle of September. And most recently, from September 24th until now, the S&P has alternated gains and losses the entire time. Again, coming after the breakout. So we had asked this question before, what is the next phase going to be? Typically have low volatility after a big breakout. And so the question is it just one day or the beginning stages of a new trend? Did the 1% decline we just had kickstart the market into a higher volatility mode that everyone has been expecting in October? Well, let's look at the table that we reference a lot, the 1% gains and losses on a rolling 1 month basis. And as we know, August was the first time we had at least 10 going back to March of last year. And so, as we know, in April began the second quarter of 2023, and things really changed. As we can tell, the number of 1% moves were extremely low every month. Only had more than 5 just one time all the way to this past April. And that just led to the ability of bullish patterns to form, have our targets hit, so forth and so on. Let's not forget, though, that March period came at the very end of an extremely tough 15-month period that began in January 2022. We know that most of that was characterized by very bearish action. And as we talked about before, from our perspective, that persisted into the first quarter of 2023 just because we couldn't trust any of those moves until things changed from a two-way volatility standpoint. So what do we look for clues about whether this is going to last for longer than, say, a day or two? Well, you look for clusters. And here's a chart showing all of the 1% declines to the very beginning of late October 2023 again. So most of the time, they were really one and done. Now, we know that the biggest drawdowns from late March to the middle of April, and then from the middle of July to early August, had clusters. We have bunches of 1% declines. That just makes for a very trying trading environment, especially coming after a very persistent uptrend. And so, of course, when that happens, buyers get very hesitant to step in until you see a sign of things changing, right? And so it's really all about the response. So when we look at that same chart and then put all the 1% gains on there as well, a few things come to light. Number one, a lot more 1% gains. The losses, of course, that's what we want to see. Number two, other than those highly volatile periods here, anytime a 1% decline has appeared is immediately followed by buyers stepping in, producing 1% gains. Sometimes the very next day, sometimes within a day or two, shifting momentum back to the buy side and showing that those 1% declines were just an aberration along a more persistent uptrend. And now, looking at those periods when the market endured its biggest pullbacks, right? Again, the spring and then this past summer, when the S&P finally broke out of that two-way volatility period, it coincided with breaking out of bullish patterns and making new highs. And that led to, again, the calmer uptrend that we just discussed that was characterized by a minimal amount of big advances and declines. And as we're coming to the middle of September, as the S&P was testing or getting closer to the 55-60 area again, we asked that same question. We dedicated a video to the next phase. We talked about it in our premium pieces even before that. The next phase being that you get through that level that oftentimes can lead to a character change in the form of a much calmer, trustworthy market, which has been in place now for the last 20 days before yesterday's action. And so why do we want low two-way volatility? Because it leads to clean breakouts. Again, these are the three biggest ones that we've seen going back to late last year. We know there have been many more of them, right? 9 successful bullish patterns along the way, but these are the biggest ones. And we saw breakouts to new highs each time, with the S&P, again, now 2 or 3 weeks into the breakout that we saw in the middle of September, and that's exactly what has happened so far. Now, we're getting to the meat of the month now with all the news and the micro and macro basis upon us, so this will be tested. But up until this point is exactly what we wanted to see so far. So the last part of this, of course, is the traditional way to measure volatility, looking at the VIX. And on Monday, the VIX gained over 15%. And on this chart, we show all of the 15% gains that we've seen in 2024. There have been 7 of them. However, 6 of them have happened since the middle of July. And we have these lines colored in red showing the times when a big move like that in the VIX on a daily basis was closer to a high of volatility, meaning that volatility was going to then roll over soon thereafter, which of course coincides with bottoms or trading lows for the S&P 500. And the ones in blue show that when volatility continued to move higher after a big gain like that. And not surprisingly, that those happened in the middle of July, August 2nd, right before the big reversal. And most recently, last 1%, or the last time we saw a 15% gain before yesterday was on the very first day of trading in October. It happened, and volatility stayed relatively elevated until we saw yesterday's move as well. Now, one more angle we have to look at for the VIX is this. Even though the VIX hasn't come close to levels that we saw in August, it has stayed above the 15 level, right? It's pretty clear support. August, September, and again, just a few weeks ago. Now, that is much different than what we saw from January all the way to July, when most of the time, 15 area acted as resistance for the VIX. So volatility was extremely low, which coincided with those calmer trading periods for the S&P 500. Hasn't been the case just yet. So it just gives us a different indication where volatility is. Now, we talked about this in terms of the drawdowns being more severe, the rallies being sharper as well. And this is reflected in the VIX staying elevated. So if we are going to get a calmer trading environment, if we are going to take advantage of the typical positive seasonality that we see in November and December over the years, a final piece to this puzzle is going to be the VIX eventually moving back below 15 and getting back to levels that we saw from the beginning stages of this year into the early summer months. That's what we have for today. Don't forget to check out these videos and subscribe, and talk to you next time.